Good evening, everyone. My name is Carlos Nogues, and I'm the Consumer Discretionary Sector Manager. Today I'm joined by two of my analysts, Araba Peraza and Jonathan Williams. And today we're going to be going over our investment approach, namely the top-down method. So we begin with the market outlook of the United States. In 2014, U.S. GDP growth was 2.4%. That's actually lower than what analysts and economists had expected, but if you dive into the components of GDP, you'll realize that consumer expenditures increased 4.4%, which was actually higher than any of the other previous years. That also coupled with consumer confidence because of the lower gas prices have allowed personal consumption to increase, and we expect it to continue increasing in the future. In Europe, quantitative easing and lax austerity measures by European countries have allowed European consumer expenditures to increase, also increasing consumer confidence. And with a strong dollar, we expect exports to increase in Europe, allowing it to increase GDP. So now that we've seen that there's a growth in the market for discretionary items, we decided to take a look at the 5 subgroups in discretionary to see where the growth opportunity was. In terms of media, we expect higher cost and lower innovation because of net neutrality rules and the consolidation of the cable market. In terms of retail, the online presence of smaller retail companies have allowed them to gain market share over some of the larger retailers, effectively lowering their revenue streams. In consumer services, as human labor is a large percentage of the cost in consumer services, we expect productivity growth to slow and stay low, lowering earnings. And in terms of household durables, we've seen weak durable goods orders since the summer of 2014, not boding well for that segment. And that leaves us to the automobile, car, and component segment. Now, the auto industry has been the same since the Model T was released about 100 years ago. However, that industry is sort of shifting in 2 different ways. First is the shared economy, where companies like Uber and Lyft are taking customers to where they need to go. And on the other side is owned autonomy, where companies like Tesla and Mobileye are creating high-tech cars with driver assistance and active safety features. And with that, we wanted to find a company that developed these autonomous products and these connectivity systems. And we happened to find the industry leader in this segment, Delphi Automotive PLC. Delphi manufactures powertrain systems, electrical architecture systems, as well as electronics and safety features. Delphi is currently trading at $81.79 with a PE of 16.07. Now, although Delphi is an auto parts manufacturer, they are constantly shifting their products to more technologically relevant products. They're actually shipping now 20 billion lines of software every day. And some of the key drivers for growth in Delphi include safety regulations, better fuel economy, Chinese vehicle production growth, and the increased complexity in vehicles. And with that, I'm going to pass it off to Jonathan to talk more about the industry outlook.
So there are 3 megatrends going on right now in the automotive industry. The first one being an increased demand for safety. 1.2 million people died last year in car accidents. That averages to around 3,200 people per day. So to help combat this negative statistics, lawmakers are increasing rules and regulations that automobile makers have to comply with. The next megatrend is greener technology, and that's basically reducing emissions and increasing fuel economy. And this helps preserve the environment. And the next megatrend is connectivity, and that's basically putting more content within the vehicles. So at the end of the day, the user feels more connected to their car. So now we're going to get into the portfolio overview to talk about the products that Delphi has to offer. The first one is the electronics and safety division. And it's a suite of radars, sensors, and cameras, which is the eyes, ears, and brains of the car. And some of the products under this division includes a lane departure system, which alerts the driver when they're drifting off into another lane. And also their class-leading adaptive cruise control system falls under this as well. And revenue has been increasing net sales have been increasing year over year. and it's planned to increase to $4 billion by 2017 due to increased regulations such as all cars under 10,000 pounds needing to have a rear view camera, which Delphi has to offer. And it's planned that they will move up a market position with the increase in net sales. The next product is the Powertrain system, and this is the heart of the car. This is what makes the car run. And Delphi's system has been reducing the engine size to help reduce emissions, increase fuel economy, and at the same time keep the same performance that cars have right now. And this is of great benefit to the consumer. And currently Delphi holds 10% of the market share worldwide, and net sales are planned to increase to $6 billion by 2017, and it will help it increase their market share potential as well. The last feature is the electrical architecture, which is the bread and butter of Delphi, and it's the nervous system of the car. 1 out of every 4 cars have Delphi wiring within them, and each one of these vehicles have 1.5 miles worth of wiring within each car. And as vehicles become more complex and have increased content, the amount of wiring within these cars are planned to increase to 2.5 miles worth of wiring within them in the next few years. And it's planned that they'll have $9.5 billion worth of net sales in 2017, and they will maintain their #1 market position with their market-leading electrical architecture. And now I'll pass it out to Araba to talk more about the business profile.
So Delphi has various strengths that have helped it attain the high market positions that Jonathan just told you about. And actually, 17 of the top car models in Europe, Asia, and America already include Delphi products. Delphi operates in 144 global facilities, which has enabled it to provide on-time deliveries to customers 99.5% of the time. And through its shift toward more software-related products, as has already been mentioned, it has also been able to cut down on capital costs, which has turned into an increase in its operating profit margin year over year, as you can observe, which is projected to reach 14% by 2017. Delphi also has a very diversified customer base. General Motors, which is its main customer, comprises 17% of its revenue stream, with the rest of it coming from other top 25 original equipment manufacturers of the world, including Volkswagen Group and Daimler Automotive. These strengths have enabled Delphi to take advantage of some of the opportunities that are currently available in the world market. So as was previously mentioned, there has been increased Chinese vehicle production growth, and that's expected to reach a total of 28 million cars by 2016. There has also been increased emission controls in various countries throughout the world, which will pressure the original equipment manufacturers to decrease the amount of particulate matter that is released per kilometer in every car, and that will generate higher demand for Delphi's eco-friendly powertrain systems. And lastly, there's also star safety ratings. They have become more stringent and so require more safety parts per car in order for them to maintain their 5-star ratings, which will translate into increased demand for Delphi's safety parts. And to move on to Delphi's strategies for growth, Delphi has de-emphasized its mechatronics business and shifted over to more technological products in order to enhance its portfolio of market-relevant technologies. And it has done this partly by increasing research and development expenditures by $0.2 billion from 2012 to 2014. As of the end of 2014, they totaled $1.4 billion. It has also penetrated into higher growth regions, particularly Asia, and for some reason the values...
I noticed. You did have that. I saw that. I don't know what happened, but the percentages were actually there.
Yeah. So I apologize for that. it's supposed to show that the revenues coming from Asia should increase by 5% by 2017, totaling 28% of their revenues. And as of now, they have already acquired 3 companies based in China, FCI, Antaya Technologies, and Unwired Technology. And that has helped them increase their China footprint and enhance their electrical architecture segment. In addition to buying several companies, they've also sold their thermal business unit to Mali for about $1 billion due to the fact that this business segment was cost intensive and low margin. And now switching over to the financial analysis of Delphi. In terms of profitability ratios, Delphi's ratios are much higher than those of its competitors, and that's due to the fact that it has less cost-intensive and capital-intensive products, and also due to its increased or higher research and development expenditures as compared to its peers, as you can observe. In terms of management effectiveness, return on equity, assets, and invested capital is substantially higher than that of both its narrow and wide competitors. And in terms of credit outlook, low interest rates have allowed Delphi to finance its operations through debt. However, its debt ratios still remain within the industry average. And to look at a historical analysis of its ratios compared to prior years, all of Delphi's ratios have increased over the past 2 years, except for those including debt, and earnings per share have also increased with an estimated compounded annual growth rate of 11%. And now I'll pass it on to Carlos, who will cover the valuation and the final recommendation on Delphi.
So for the valuation of Delphi, we used 4 methods, 2 relative methods and 2 DCF methods. For the DCF, we used a WACC of 9.5% and a terminal multiple of 9.6 times. And the growth rate we used was 3.5%. And then taking the average of these 2 DCF methods, we came across a target price of $99.51, giving us an upside of 22% over its current price. So before I finish, I just wanted to mention that Delphi is the only company among its peer group that has its hand on all 3 of the industry trends. And with its shift to more technologically advanced products, Delphi is able to best take control of the sector because of the evolving industry that it's in. And as you all know, in 2020, Apple is set to release its Apple Car. Now, Delphi does have a business relationship with Apple, and because of this, Delphi is best positioned to leverage that relationship to supply Apple with its products. And with that, I open up the floor to some questions and answers. So they have different
where they're going, the technology.
Okay, so there's Autoliv, but Autoliv also makes parts that they intertwine with Autoliv's parts. Then you have Tesla that makes autonomous parts themselves. And then there's also Autoliv, which is among our narrow competitors, but It's not working. Yeah, it must be something that you didn't use the laptop before. Okay, so when we compared it to Autoliv, we saw that Delphi was better capable to expand on this growth. Yes, Mobileye, but with Mobileye, they also use products in unison with Mobileye. So in cars today, you'll see products that Delphi has and Mobileye has in the same car.
Did you mentioned a number of, I guess, 3 trends, macro
Yes.
trends that are going to be drivers of growth for this company. Could you kind of break those down? How important is each? Is one, while you have automated driving up there, is that half of the growth rate? Are they all kind of equal?
So with automated driving, it's mainly going to impact the active safety market. And active safety for Delphi is expected to increase 50% from 0.9 billion of the revenues to 1.8 billion. And in terms of the trends, each of them fall into the categories that Delphi has in their products. So for instance, safety falls in line with their electronics and their safety segment. Green falls in line with their powertrain systems. And then electrical architecture falls with the connectivity of the cars that are going to be so advanced that, okay, for instance, cars right now have about 100 million lines of code inside each of them. That's a premium car. And compare that to a Jet that has 25 million lines of code, and Microsoft Office, which has 44 million lines for the suite of products in Microsoft Office. So yes, they have all their products involved in all these three trends, and they hope to continue that in the future.
So I guess risks on each of those is kind of where I was going. So on automated cars, 2 years ago I was actually at the General Motors Analyst Day, and I was talking to them about autonomous cars, and they said not in our lifetime with litigation in this country, because as soon as one of those automated cars gets into an accident, they can't sue the driver anymore, and they'll just go sue General Motors, which is obviously has deeper pockets. In terms of green cars, especially electric cars, fuel prices are coming way down.
Right.
So the attractiveness of electric cars is much less. And then in terms of in-vehicle entertainment systems, the risk factor I see there, one of the trends is that the high value is in your smartphone, and your smartphone plugs in, and that the Delphi product, instead of having processors in the Delphi product, is now just a dumb screen powered by your smartphone, so the value of that entertainment system in the car goes down. Can you talk about each of those risk factors?
Right. So I'll start with green first. Delphi's products are not electrical. They don't manufacture only electrical cars. They do gas and diesel powertrains. So what they're doing with these is they're making them more fuel efficient and with less particulate matter released from each of these segments. In reference to the safe part with automated driving, Delphi actually completed its a cross-country automated driving tour from LA to New York, and they reached New York in April 2nd, and that was completed 99% with automated driving. And then in 2020, Elon Musk said in 2020 that he expects an automated car to be released in the market where you could fall asleep in the car and wake up at your destination. And then in terms of...
But that doesn't address the litigation issue. If that car does get in an accident,
right,
now they can sue the automaker who's got much deeper pockets. That's a heyday for lawyers to go sue automakers, and that's my understanding why automakers would never be dumb enough to put that product in the market.
Well, I'd have to look into that to see to answer that question.
So they're selling to manufacturers, or they sell in the aftermarket? Is it all?
No, they sell it directly to they have an aftermarket segment, but they also sell to the OEMs directly.
They're invested in the car industry, really?
Yes. It's a function of vehicle growth in the car industry, correct?
The
R&D, they spend on research and development more than all of their peers as a term of sales, and they're continually expanding their technology portfolio to less capital intensive products and more software related technologies.
Historical resilience, I should say. When did this company go public, and what's happened in the last few years? Because they were part of General Motors, right?
GM, correct. They IPO'd in 2011 at $20 a share, and since then it's risen about 150% to $81.79 where it is today. Right. Questions?
We didn't address the risk factor I asked about in terms of the entertainment systems in the vehicles.
And the what, I'm sorry?
Entertainment systems. So they make the entertainment module in the dash.
Right.
If the value is going to your smartphone.
Okay. So what they're planning to do with the infotainment side of the vehicle, they plan to add gesture control and eye gaze control, so you don't have to be playing with it with your hands. You could just kind of move your eyes and show what you want it to do, what you want it to play, or if you want to look for GPS or things of that nature. So they're trying to be more connected to. They're trying to make the connectivity easier for the driver to use.
All right, so we are going to proceed here. So how many in favor of Delphi? Raise your hands. We have 1, 2, 3, 4, 5. Wow, you just made it. Alrighty.